Good morning. My name's Nick Seidel with Silverton Mortgage. I hope you're well this morning, and it's a pleasure to speak to the Janice Overbeck clients and friends this morning about a few topics. First, I think that anyone that's an American would say we're very thankful for our veterans. As such, Silverton came out with a new offer that was sent out. Some of you might have seen it in the past 2 weeks, and Janice asked me to speak about it this morning. That is related to Silverton coming out with no lender fees related to mortgages for veterans. So we charge $1,295. It's a flat fee for any mortgage that we do. We don't have underwriting fees, processing fees, credit report fees, this fee, that fee. Just simple baseline $1,295. Well, we have come out with that we wanted to do more for our veterans as a thank you. And so we've waived that $1,295 fee. In addition, we have bettered our already very, very aggressive pricing related to interest rates. So that, you hear a lot of terms in this industry, discount points, credits, et cetera. Essentially, you've got interest rates, and if you think of it on a chart, you've got one that doesn't cost or pay you anything. And if you go lower on that interest rate scale, you pay one time to get a lower interest rate. If you go higher, you get a credit that reduces your cash to close. Well, in this case, our pricing was already good, or really, really good, and now it's great. So that's exciting in addition to the waive of the additional fees. So 0% down options with no origination cost and with better interest rates. Great deal. For our veterans, I just want to say thank you. My dad was a veteran, and I'm very thankful for all of you that provide service to our country. Second topic, as many of you may have seen in the news recently, or seen in the stock market and all these different markets that coalesce. A few weeks ago, market was riding high. Every day it was growing, the stock market that is, even though there were the news about the coronavirus and what was going on in China. Well, over the past 7 to 8 days, we have seen the opposite take place, where the market is going down, 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 in the stock market that is. Well, that's because of, with me not being an economist, from what I understand, is that the economies or the markets are shifting based upon the outbreak of more and more related to the coronavirus and how that could impact supply chains, etc., which could slow down the world's economy. Well, where does that money go? That money goes somewhere. Well, oftentimes when money goes, in this, especially institutional money we're talking about, when there's a scare in the market and the money comes out of stocks, it goes to what would be considered a safer investment, which is oftentimes mortgage-backed security bonds. Those bonds then have greater demand. When that happens, the bonds give greater return. Well, for you, if you have a mortgage, when that scenario happens, obviously the coronavirus is terrible, there can be a gain. That gain is interest rates going down, down, down in terms of what you pay. So the margins have to be made on mortgages. So when the bonds are up, you and your interest rate and your cost for your interest rate goes down. Well, so why am I telling you this on this video today? For a couple reasons. One, right now affordability to purchase a new home is great in terms of interest rates. You might have seen in the news just in the past couple days, 8-year lows. People think that it might even go slightly less. I think we might be splitting hairs on how much less it could get than right now. And we're talking low threes in many cases for 30-year fixed mortgages. And I've seen into the twos for a 15-year mortgage. So that's really, really good. Obviously, each scenario is different. So there's multiple factors at play that come into the interest rate pricing, but really, really great rates. So why is that important, again, for you? So obviously, what I just said, if you've been considering selling your home, I hear from realtors all the time, the market, it needs more homes in it because buyers aren't finding what they're looking for. So you can maybe get some top dollars on your home and at the same time get into a new home and a new mortgage at a very low cost, which makes affordability much greater than when rates are in 4s or probably in 5s in the next couple of years. The second part of this is, if you're saying, nope, I found my home with the JO team, I'm good, I like it, well, now's the time to think about refinancing. You're probably seeing that all over, but the truth is the truth. Over the past few years, all the mortgages that I've done, I've been going back and look at those, and typically the return on investment is somewhere between 8 and 14 months before you're breaking even and then ahead every month. I'm seeing 30-year fixed mortgages that I did last year that by doing a refinance now and taking that spread of savings that's happening every month and applying it just straight to principal every month, so not making any greater payment, people are shaving 6 to 9 years off their mortgage based upon just the change of interest rate. Then I'm also seeing instances where people are like, no, I'm good with just paying the regular. I just want to save money and use that money to pay off debt or do other things. And that's happening as well. Oftentimes dropping payments from $180 to $360 a month, depending on the mortgage size, etc., with just a refinance. And that refinance doesn't require you coming out of pocket cash. We're financing into the loan those costs to do the refinance. And then in many cases, you take 2 months off of your mortgage payment by closing at the beginning of the month. You don't pay your old mortgage, say, at the beginning of April. You don't pay a new mortgage at the beginning of April. You don't pay a new mortgage in May. You pay it June 1st. So you get 2 months off of those payments, and you get the monthly savings, and you're going to get back your escrow account from your old mortgage. Lastly, the point that I think is very important here is the Overbeck team partners with Silverton, and Silverton has come out with a program for you, if you're part of the JO team and reference this video, of on any refinance less than $200,000, there will be a $500 credit from Silverton on your refinance. The second offer is any loan above $200,000, we will provide a $1,000 one-time credit on your refinance. I think that's pretty exciting. That's real money, real savings, and you can thank the JO team for that credit. That is not being offered to everyone. That is a special offer for you as a client of the JO team. And so whether you're thinking about buying or considering I'd like to save some money or shrink down the term on my mortgage, now's the time to do it. And this is brought to you by the JO team. We thank you very much, the Janice Overbeck team, for the relationship. I work very closely with them out of the same office and hope to speak with you soon. Again, my name is Nick Seidel with Silverton Mortgage, and I can be reached at 404-542-4554. Again, that's 404-542-4554. Thank you.